Robschild. Nothing I say is investment advice. Welcome to the show where we view financial markets through crystal ball gazing. J.P. Morgan once said, millionaires don't need astrologers, but billionaires do, and so we begin. It's Monday, May 6th, 2024. Theme of the day, sell in May and go away. There's no data of any interest really this week after a lot of very crazy data coming out, volatile data rather, coming out last week, and we certainly saw a bit of a sell in May and go away effect. This is referring to, of course, how a lot of professional money and professional traders don't trade in the summer, basically, and what happens is volume dries up. That means over, like in one day, for example, the amount of stocks that are sold and bought gets reduced immensely, and so there's a lot less people trading, and so things can get boring, and they sure did today. This is especially strong later in the summer, in the real summer months where volume really dries up, and it's boring. It's a boring time to be looking at markets. I've seen what goes on in markets during the summertime, and the opportunities are limited. It's important to remember that you don't always have to make a trade. You can sit on your hands as long as you want. You can sit on in cash or whatever you're comfortable with as long as you want. You don't always have to make moves, even as an active investor. You don't have to always be moving around. In the summertime, it's harder to find good opportunities because nothing happens typically in the summer as well. But before the real summer starts, we still have next week some potentially powerful, potent data, the CPI and PPI. Again, I think that things are slowing down here. I'm expecting these numbers to be low, or at least lower than previous, perhaps lower than expected. On a weekly time frame from the S&P 500, last week we had a hangman candle, and I thought this would be a reversal. We would head back down. Instead, for the week, this is only 1 day worth of the candle so far. The candle keeps moving up and down until the end of the week. So far, we have an open higher than the closing of last week and a closing today higher than that. I think when I look into my crystal ball, it looks like I don't think this is going to hold up, not even this week. I think this might even be a good opportunity to short. I might end up taking a short here. I'm a decent chartist. I'm never going to claim to be as good as a lot of other YouTubers out there, especially like I always talk about Gareth Solway, but I did notice this trend line. I mentioned previously how it seemed like we had a wedge here and broken down out of it, and now we're all the way above it, and so but we are hitting this little line here. The one prediction that I will say and go on record is I still think we are not going to new highs from the end of March in the S&P 500. A day like today with low volume, by the way, another thing that happens with low volume is you tend to get these like melt up periods where there's just not enough sellers. People are just taking a break. And, we're seeing a little bit of this maybe in HYT as well. We are actually higher in HYT, high yield corporate bonds, my favorite leading indicator for stock indices. You might not even be able to see it in this video, but where my mouse is right now is a tiny little doji pattern. In other words, the opening and closing was pretty much exactly the same, and there was a tiny wick on the upper and lower side. Right at the very top of yesterday's candle. This is a very non-event kind of move. It could end up actually spelling a top in HYT, but not completely sure on that. Supporting the stock market, DXY, the value of the dollar against other currencies. I mentioned previously I thought we broke out higher and then we broke out lower. We're still staying under this. So the dollar going down a little bit here is helping support markets. I don't expect this to last. I do believe the dollar will head higher here based on the fact that, we are still tight. We're not loosening monetary policy. It seems like everybody else has looser monetary policy internationally around the world, and so it would make sense for the dollar to go up here. And this will put pressure, downward pressure on the valuation of stocks. One market I really like following that I have a small speculative position still in, the juniors of uranium, is uranium miners. I would want to get back into this market if it ever gets cheap enough, but I will note that we have made recently a higher high from back here in April 3rd. From that date until today. However, when you look at the RSI, we actually have a divergence here, and so this is one of those alarm bells that goes off and says, careful here. This means that the price is probably wrong if the RSI is going the other way. What you want to see, if it's truly strong, is for the RSI to be higher along with the higher high pricing of the URA. Sorry, you can't really see that too good. So I expect this to roll over. This, if I was more active, I might even short uranium here. But longer term, I'm still bullish, but I'll only buy on major dips if that happens. Personally, I haven't figured out if I'm really actually gonna be shorting anything here, but it sure is. It sure does look juicy here. We have a little trend line here in the Qs and the Nasdaq, and if we get up to this line here, it should provide at least some resistance. Again, I'm overall bearish in United States stocks. Last chart for today, EWZ, Brazilian equities. I had previously drawn I talked about this, I've been talking about this for a while, and how we've had this longer term wedge pattern, and how we had very, very recently finally broken out of it. I mean, and this trend line goes back all the way to arguably 2008, and so this could be a very, very powerful move. As I've been mentioning, the intrinsic value of the stocks in Brazil are severely undervalued. These are companies that make huge amounts of money that is not valued in the value of the stocks. This entire ETF has actually quite a large dividend to check out. So anyways, I had previously drawn my trend line using these tops over here as part of the trend line. I did not realize that this trend line actually works better from the actual top. If you actually use it there and you have it hit these spots here, we didn't actually break down below it. I mentioned in a few previous shows that I was worried that we had broken below this trend line of this massive wedge, and if you draw it from this, if you use this as your top for your reading this pattern, it actually is securely above this line still. Digging a little bit deeper, when you break out of a wedge pattern, the target is supposed to be from the breakout point. It's supposed to go up the same amount as the initial size of the wedge at the beginning, and I'm going to count it here. And if that plays out to be true, then the value of this fund could easily get to, with decent probability, from $32 a share all the way up to around $120 a share. And from a valuation standpoint, PE ratio, these are companies that make way more money than is accounted for the price of their equities, as I've been saying. This is not an unreasonable target. And I would suggest that it's entirely possible for it to go even much higher, but probably not worth the risk. There's still, as much as I try to dismiss political risk exists, and it is real. Once the company, once you have inflows into investing in a country like Brazil, and the government's down there, well, can't get into the politics, but Main point, this looks like a great opportunity in my opinion. Now the probability of actually reaching that target, according to what I'm able to find with patterns, if someone knows better, please inform me, let me know in the comments. I'm getting anywhere between 50 to 70%. But, you know, again, like, I don't need it to get to that target. I can get it to go halfway to the target, and that's an enormous gain there, and we're talking several 100% gain in a relatively shorter time period than what you'd expect, you know, to get those kinds of gains from. So anyway, that's all I have for you today. Hope you enjoyed watching. Thank you for watching, and see you next time. Robschild.